Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Steady as it goes for the markets, but a couple of stocks in the broader markets which are in focus. Let's speak to one of the managements of that company. Steel Strip Wheels is in focus. The company recorded 10% sales turnover growth for the month of February on a YOY basis. Feb tractor sales also was up 52% in the month gone by. To discuss the demand trends and business outlook, we are now joined by Mohan Joshi, who is the head corporate strategy and investments at the company. Mohan, good afternoon. Thank you so much for joining us. Well, when I speak to you about your February numbers, exports are down around 26%, while the other segments have done really well. Can you tell us what is the export outlook? Because earlier when we had spoken to you, you did mention that Q4 will see the best exports ever. Is this something that will happen?
Thanks a lot for having me. I think you rightly pointed out all the metrics that I discussed last time. The Q4 will be the best export month for the company in the past 4 or 5 quarters. We started seeing a decline since September of last financial year, and that's always known to the world because of the situation in the US and Europe. And then Q4 should see the best of the lot from the PV side, from the truck side, and from the other off-the-road vehicles that we are trying to export now. And we feel that this financial year, we should do around 300 plus minus something crores, a small 5% here and there. And for the next financial year, we are targeting a minimum of 550 to 600 crores worth of exports. And we feel that that visibility is fairly indicative right now, led by our alloy exports.
Yes, Mohan, so you are saying that Q4 will be the best ever exports and FY24 exports will be around 550 to 600 crore rupees. What was the guidance that you gave for FY23? Because the earlier number was 600 to 650 crore rupees. And despite the fall that we saw in February, exports are still good in Q4 is what you're saying.
Yeah, so what I felt is that I think the latest earning calls that I indicated with the latest trends was in Q2, where we indicated the numbers to be around 450 crores. And the trend was still weak going into the Q3. The Q4 is, ending up with this month of March at a trend of close to 500 crores worth of annual pace. And we feel that the alloy addition and the rest of the existing business should take us to 550 to 600 crores for the next financial year.
Got it. So FY23 exports should be 500, next year 550 to 600 crore in terms of export sales, right?
No. I think for this financial year, it's going to be 300 crores plus minus 5%. For the next financial year, which is for 23-24, we are targeting 550 to 600 crores.
Got it. Can you talk about your overall top line then? In the first 9 months, you've done about 3,035 crore with EBITDA, absolute EBITDA of nearly 2,500 crore. How much do you think you will be able to end FY23 with, and any forecasts or projections for the next year?
For the first 9 months, as you said, we have already reached that number of 3,000 crores plus. For the full year, we guided between 4,000 to 4,100 crores, and we are in line with that. For the full year, we anticipated the EBITDA to be in the line of 450 crores plus minus 2-3% here and there. And for the next financial year, we feel that we can improve this EBITDA numbers by close to 15 to 17% with the kind of growth that we are envisaging. On the top line side, I think 4,500 to 4,700 crores is what we are trying to eye for the financial year 23-24.
Okay. So that is about the revenue growth guidance. Talk to us about your debt, because on 30th Jan as well, you put out a release saying that, yes, 230 crore rupees is the current long-term debt. With the capacities that you plan or the expansion plans, what will the long-term debt look like by end of FY24?
I feel over next 1.5 years, the debt should come to double-digit numbers. I'll not say a wipe out of the debt, because there is the expansion which is going on in this financial year, as well as next financial year, as well as the next financial year, to expand the capacities of Mehsana from 3 million odd to close to 5 million. And we feel that entire capex, which we are trying to plan right now, will be done up with our internal approvals. And any opportunity that we see in terms of debt reduction, because there is a hold in capex or a slowdown in the capex, and we see opportunities are less, will be diverted towards the debt repayments.
What's the outlook on your gross margins? I think your target was closer to 40%. What are the big drivers now on the margin front?
I think gross margin is a little tough thing because raw material prices are just going all over the place, and I feel EBITDA is a better way to look at it. We are very close to 11% in terms of an absolute number, which is hovering around with a deviation of 20-30 basis point. And the aspirational EBITDA that we feel going forward is moving from this 11% to 11.5 to 11.75% going into financial year 23-24.
Okay, Mohan, I just needed one clarification because, the earlier guidance that we had on exports was around 600 to 650 crore rupees for FY23. Was that the correct number? And now that you're saying it'll be around 300 crore rupees, that's almost half of what you were expecting earlier. So you're still saying export...
I think I corrected that in Q2 itself. I think there is some misjudgment in terms of the last checking. I did it to 400 crores plus minus 10% in Q2 end. And unfortunately, we could not meet at Q3 end. And with the latest earning calls that we have given is 300 crores with the situation which is prevailing in the world.
Got it.
And which we feel is going to be at 550 to 600 crores the next financial year.
And this pickup in exports will be immediately from the month of April, or do you think it's going to be very back-ended? How do you see this export revenue spread out over the course of FY24?
So, for the Q4, I think we have seen excellent performance coming in from both US and the European side. And we feel that we are at the peak of the economic interest rate cycles. And going forward, the issue of inventory, which was a larger issue for the world, is sorting out, and inventory levels have rationalized themselves from 8 to 9 months to 3 months. So I feel every quarter is going to be a quarter-on-quarter growth. As I said, Q4 for this financial year is one of the best. And we are at a rate of close to 400 crores plus in terms of this quarter's annual run rate. And we feel that every quarter is going to be a gradual increase going forward to reach to the levels that I've shared with you.
Okay. All right, Mohan. Thank you so much for joining us and giving us all those details. So that's the word coming in from Steel Strip Wheels. Q4 is going to be strong for them is what the management says. We'll slip into a break. Up next, we have a special segment, Midcap Spotlight. We'll focus on midcaps that are gaining in trade and are buzzing around. Stay tuned.